This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In tonight's video, I'll be going over the data sets and the technical analysis for the SPY for January 6th, 2026. And tonight's video will be fairly quick. I'm not feeling very well, so I apologize if it sounds like I'm kind of rushing through this video. Now, today we had the manufacturing data from the ISM. We have the non-manufacturing side of this data on Wednesday, but as for the manufacturing side, we saw weakness pretty much across the board. We saw um, both of these numbers, both the employment and the PMI, are still under that 50 point. So they're still within a constricting or, a constriction. Um, the prices are still, while they're above that 50 point, they have been trending downward. I believe they were at 61 at one point. Yeah, earlier this year, 52 pulled up all the way to 69.4, 69.8, and then started pulling down to 64, 63, 61. Now it's 58. So that trend was showing that there was some increase in the ISM manufacturing prices, but now that's starting to pull back down again. The Atlanta Fed GDP, or the GDP now, we discussed this, how I had expectations this would pull down very likely to the 2.9%, if not the 2.8%. Surprisingly, it pulled down even further than that, down to the 2.7%. Um, Not good. Now, for Tuesday, January 6th, we have the S&P um, Services and Composite PMI. Both of these are expected to come in cooler, so that should pull down the yields. That should be bullish for equities overall. And we will go over Wednesday's data in tomorrow night's video.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And very quickly going over the SPY, I apologize I don't have my standard moving average chart and everything up at the top. However, let's just very quickly go over it. So with the SPY closing at 687.72, that means we did pull upward. We did pull above the 5 mile. Technically, it's kind of within that upper bounds of the 5 mile range, which means that very likely the market is aiming to have the 5 mile break above the 10 mile. As of tomorrow's session, it's extremely likely we will see that occur. And when that happens, that really sets the moving averages aligned all in a bullish stance, meaning the 5 miles above the 10 mile, the 10 miles above the 20 mile, 20 mile is above the 50 mile. This is very bullish, and this is what you're looking for an upward bounce. Again, we've been discussing how we anticipate potentially that 5 mile test into an upper Bollinger type move. Again, that's still fully on the board, and still fully anticipate that. All of this structure has been looking very good for the bullish upside, and off the Bollingers and moving averages, even going into the hourly time frame, we see a lot of strength in this bullish structure. Even though there is a little bit of a selling structure, sorry if there's drawings everywhere, but this inverse head and shoulders played out like we discussed. And from that inverse head and shoulders, we had this cup close. And from that cup closing, we now have the handle forming. And from that handle forming, that's how we get to all-time highs. Now, I was expecting that to push a little bit harder today. The fact that it didn't is slightly concerning, and I am going to very quickly highlight this selling channel that is potentially here. Um, Nope, that kind of invalidates it even more. Yeah, it doesn't look very likely, but we will go ahead and label this just in case we see a rejection up at this 688 range. However, I feel the expectation should truly be that we have been seeing cups after cups after cups closing, handles closing, inverse head and shoulders closing, um, bouncing out of very bearish liquidity ranges. Everything looks extremely good. We had another bounce. You know, it excuse me, we didn't have a bounce from the upside or from the downside, but we did pull out of that yellow liquidity range today, which really means that the all-time highs is very much so on the table with the data sets over the next few days expected to come in cooler, meaning again dovish. So that's um bearish for the yields, so that pulled the yields downward, pull the dollar downward, very likely push a lot of weight into equities. So the upside looks extremely good from here. What you're looking at from the downside, if we're going to have downside from here, is you're going to look for a 5 mile rejection. With the 5 mile pulling upward, that pulls the upper and lower bounds of the 5 mile upward as well. So just keep that in mind that that level's about $2 above and below the actual moving average itself. And generally, the market will aim to test that level. So if we're going to be pulling back downward, we will be pulling down into the lower bounds of the 5 mile. Very likely seeing the VVIX pulling upward at that level, seeing confirmation and more downside through going through the 10 mile and going through the 20 mile, etc., etc. Now, again, this looks very primed for an upside move. Technically, tomorrow, all of the moving averages are going to be in a bullish stance. Now, we're not entirely out of the woods yet. We really do need to clear this prior range at the 691.66 and seeing a new all-time high from that level. And from that all-time high, again, what's above us? The upper Bollinger. Now, I don't anticipate an upper Bollinger move to occur tomorrow. Um, if it does, I'll go over it in tomorrow evening's video. Very likely we'll be discussing it in tomorrow evening's video anyway. Um, but what that means is if we have a very hard buying push tomorrow and we close at or above this level, don't be selling calls, don't be selling your positions. You should be waiting for a higher high from that level. So with that said, I'm going to end tonight's video here. I hope everyone has a great day, great night. I hope you all did very well with your trades today. I had a very good trading day. I did a very good scalp in the first part of the session, got the high, and I tried to set up a secondary scalp during the end of the day. It did not work out so well, so I did lose out a little bit, but I still made about 500 on the day for the scalps, which that's very nice for me. That adds up quite a bit, you know. I have not been able to scalp in almost 9 months now because of my, physical fatigue and everything. So it's very nice to be able to scalp once again. So with that said, I appreciate everyone for taking the time to watch my videos. I hope my videos help, you know, with your trades or your analysis. And again, I will see you in tomorrow's video. Take care, everybody.